T Street trades flat after a muted start following a weak handover from Wall Street. Banking stocks relatively outperformed.
Telecom stocks rise following Telecom Minister Jyoti Aditya Scindia's comments on supporting tariff hikes and adding that they were extremely low, suggesting more tariff hikes by companies could be likely.
HDFC AMC and HDFC Life gain in trade. HDFC Life is among the top Nifty gainers, reacting to Q2 earnings. Management tells CNBC-TV18 they are revising their APE growth guidance to 18 to 20% from 15% earlier and target VNB growth in the range of 17 to 18%.
Hello and welcome to Chartbusters. I'm Nigel. With me is Vivek. And as we speak, the markets are trading more or less flattish with a bit of a negative tinge. The good news, though, is that we still have a fair number of stocks that are advancing in comparison to the number of stocks that are declining. It's a flattish start, Vivek, but a few of those stocks are doing quite well. I think the HDFC group itself is doing well. You have HDFC Bank that's close to around its 20 DMA, and both the other two twins, that's HDFC Life and HDFC AMC, they're holding strong in today's trading session.
Well, good morning, Nigel. You know, when we started off trade, you actually saw quite a bit of a sharp dip, and it appeared as though, looking at the GIFT Nifty, that we will open with a very sharp gap down. But there's been quite a bit of a recovery. Yes. Markets holding on, but now, trending near the lowest, trending lower compared to where it was yesterday. Like you mentioned, HDFC Life yesterday reacted very negatively to its results, given the margin compression. But after that, you've actually seen today the stock doing quite well. HDFC Life is the one that we're talking about. But moving on, TD Power Systems is the stock on our radar. The company has recently won gas engine generator orders worth 142 crore rupees, and the company has also issued encouraging commentary for further order wins. Nikhil Kumar, who's the managing director of TD Power System, joins us now to discuss the outlook for the business in detail. Good morning, Nikhil. Thank you so much for joining us. First up, take us through these order wins. What does it do to your order book, and what is the kind of execution timeline you're envisaging for this particular order?
Okay, all right. I'll tell you what, we'll just try to patch that line yet again with Nikhil, and then, we'll get that conversation going. But for the time being, I think we can shift focus to our special segment, Money Control Pro, where we get you a few ideas for profit. And, to help us out today with, a few ideas for profit from Money Control Pro, we have Anand who joins us. Anand, over to you.
So today's stock idea is V-Guard Limited, a strong brand in the electrical and household sector, predominantly in South India. Over the past 4 decades, a company has expanded its product portfolio from a single product, stabilizers, to 22 products today. It is the market leader in stabilizers, holding a 42% market share in the organized segment. It also has a strong presence in water heaters, fans, pumps, housing wire cables. The company is transitioning from an outsourcing model to in-house manufacturing. The contribution of in-house manufacturing has increased from 40% in FY20 to 65% in FY24, having a target to reach 75% in next 12 to 18 months. V-Guard is also pursuing geographic diversification. The non-southern region market has grown significantly, rising from just 5% of total revenue during 2008 to 50% by Q1 FY25. The company aims to increase its market share by 200 basis points annually over the next 4 to 5 years. The acquisition of Sunflame Enterprises has strengthened V-Guard's kitchen appliances portfolio. Although Sunflame has faced several growth challenges due to weak institutional demand. To address this issue, the company is establishing a new sales team to drive sales growth in this segment. The stock is currently trading at 43 times on FY26 earnings, and the recent correction of 15% from its all-time high looks like a promising opportunity for the investors.
Thank you, Anand. Let's now slip into a short break. On the other side, we will be joined by Nikhil Kumar, who's the Managing Director of TD Power Systems, to discuss the company's business outlook at large. Stay tuned. Welcome back. You're watching Chartbusters here on CNBC-TV18. Well, we had a bit of a connection issue with TD Power Systems, but like we promised, we have the MD of the company with us, Nikhil Kumar, who's the Managing Director at TD Power Systems, joins us now. Good morning, sir. Thank you so much for joining us. First up, take us through this particular order wins, the quantum, the size, the timeline of execution, and what does it do to your order book?
Yeah, this is a very big order for us from the gas engine segment. We have two major international gas engine OEMs. There is a very large increase overall in the gas engine business worldwide. We are well connected with this business in the sense that we have two large OEMs who are two leading players in the world in this business. The end use is, grid stabilization units, where, for example, if you have a country where there's a lot of renewable power generation, then suddenly, let's say, wind stops blowing or the sun stops shining, you need hundreds of megawatts to come onto the grid instantly. Then these gas engines are used to stabilize the grid. So there's a big increasing requirement for this kind of application. Then data centers, artificial intelligence, server farms, they need backup power, emergency power. That's also a huge sector, which is again booming. And then we also have the regular business of baseload power. So we are seeing a significant, a huge uptick of business in this particular segment, not just gas engines, but also gas turbines. So overall, TDPS is in a very, very good position in the international market to capitalize on this opportunity.
Okay, all right. Hi, Nikhil. Good to speak to you. It's been a very, very long while, and it appears, the business is looking up. Fill us in with a couple of details then. What is the current order book? What has been the order inflow till now, and what are you factoring in for this year, FY25?
Yeah, the overall order book is very strong. So, I don't want to talk about the exact numbers. I can't talk more than what was declared already for Q1 because we are this until I declare the results for Q2. I need to be silent about the actual numbers. But all I can say is that we are going to exceed the guidance. And we are in a situation where right now the factory is absolutely full. Orders for this year are absolutely full. And we had given a guidance earlier for 1,200 crores for the company for the whole year. Looking at the current situation, we're going to exceed that guidance. So we are putting up a third plant because we're just running out of capacity. And until the third plant is ready, which is somewhere middle of next year, we have to find innovative ways to push more products out of our current factories. The situation is extremely strong in terms of order book, order inflows from international markets.
Nikhil, so you're most likely going to go ahead and exceed the order inflow guidance of 1,200 crores that you're given. Would you also be exceeding the guidance for the top line that you had given earlier? And another question
is... I talked about the top line guidance. Actually, we're going to exceed the guidance for top line. We're going to exceed the guidance for bottom line. We're going to exceed the guidance for order inflow. So we are in a situation where, we have been working for the past decade to establish ourselves in international markets. And now we are well positioned to really capitalize on this big energy transition which is taking place all over the world. And this effort of the past 10 years is now paying off for the company.
There was a period where order inflow was not coming in, and now you're talking about your factory being fully full, and that's why you're setting up another unit as well. So it seems that the cycle has turned big time for you all. Give us a few more details. What's likely to be the split between export as well as domestic business? I believe that the export business is margin accretive. So clarify on that as well.
Yeah, the export is overwhelmingly export. So, if we look at the order book for Q1, it was something like 70+% export. I think, although I can't declare the exact numbers, it's going to be in the similar range for Q2, even a little bit more. And looking at the upcoming order inflows, this trend is going to continue. The growth for us in the export markets, penetration in export markets is far, far greater than what we're seeing domestically. Of course, for us, because we have a larger product range and we have more markets that we can address for the export markets. And of course, the market, is much larger internationally compared to what we have domestically. The domestic market is also good, but compared to what the opportunities are for the company internationally, the growth for the company is much more exciting from the international perspective compared to the domestic perspective.
Thank you so much, Nikhil, for joining us. We'll get you once again after Q2 where you can talk exact numbers. Well, moving on, MasterCard has opened its largest global facility in India, in Pune, placing an even bigger bet on India to power its global solutions. Shireen Ban caught up with Michael Maybach, the global CEO of MasterCard, to learn more about the company's plans in India and how the new facility will help MasterCard achieve its global ambitions. Listen in to an excerpt of that conversation.
In all of your visits here over the last 20 years, what do you believe has been the most significant change?
So when I look at India, first of all, in the broader global ecosystem, I sense the sense of optimism about the India opportunity. So MasterCard isn't a standout from that perspective. We're deeply involved in the market, so we might have a deeper view than others. And from that perspective, what I've seen, particularly over the last 4 or 5 years, when previously at product in MasterCard and now at the CEO role, is this tremendous growth of the digital economy in India. So as India leverages technology to pull more people into a more inclusive digital economy, that's a real standout. That obviously is a tide that lifts everybody's boats, including MasterCard's, and we're happy to be on that journey. So I like that. Yesterday we launched a very big facility here in India. One of our 7 tech hubs has been launched in Pune. It's about 6,000 people there in a state-of-the-art facility. And the sentiment of our employees, first of all, there's excitement.
Yeah.
They see the commitment to India with this investment, but there's also this excitement and the sense of opportunity, and we will find a solution, we'll find an opportunity. The level of ingenuity here is just infectious. So every time I come here, that is one thing to look forward to. There will be one new idea that I will find out about, which I did.
A new idea yesterday?
Yeah, well, actually, we launched a big this new idea here only. When was it? The Global FinTech Festival.
Right.
A few weeks back here, which was passkeys, which is basically biometric authentication for online commerce. Might not sound very exciting to most people listening to this. I find it personally very exciting because it makes something very complex very easy and very safe. You're online and you know it will just work. And you just can rely on that. I thought that is a very exciting idea, and it was first launched in India.
Well, I will come to the launches in India and what India is likely to do for MasterCard in terms of powering your global solutions. But coming back to Pune, as well as your aspiration for India, you talked about the 7 global tech hubs that you have. I believe this is going to be your largest facility for MasterCard globally. As you were allocating resources, what made you want to double down on India?
Right. So we have been in India for 40 years as a company. We've been, bringing our payment solutions here. We set up our initial facility in Pune 10 years ago. So we have 10 years of experience with our ability to attract the best talent in the country, to attract talent that allows us to co-innovate out of India, catering to some of these special situation, where everything in India has to work at scale. Now, this makes it a very unique market. We're a business that's all about scale. We're in 200 plus countries, so learning about scale and having employees that have that mindset sets India apart versus some of our other tech hubs where we do other things really well. We've learned over 10 years on how these tech hubs can work with each other, and it is a global network of innovating tech hubs, follow the sun model, spanning the globe. And we said, okay, we're going to double down here because we have the talent, we have the scale aspect, and we have this aspect of, coming back to the culture point that I made earlier, the ingenuity is just really strong here. So puts us in a position to do that, and we feel very welcome because for 40 years now, there's a strong partnership with the government here, with the fintech sector. So for all of those reasons, I can go on. But we made a decision, and it's a commitment to India, but it's also a commitment to innovation and what we do around the globe.
Can you quantify the commitment in terms of the incremental investments that this will entail in this new facility, this expansion that you have announced, as well as what we could expect over the next 5 years from MasterCard?
So over the last 5 years, we invested $1 billion here. This project's been, we opened it yesterday, but it's been a 2.5-year kind of construction project, absolutely state-of-the-art of employee experience. So we expect the staff number to grow in India, and it's been laid out for that. So many more opportunities that we will be investing in.
Well, speaking of opportunities, and you talked about collaborating with the thriving fintech ecosystem in India. Take me through what excites you about what's happening there. Also, what worries you? Because, I mean, the pace of change is significant and the pace of innovation is pretty remarkable as well. So both from an opportunity point of view, but also a threat point of view, how do you look at that?
Right. So we started off talking about us being bullish, me personally being bullish on the India opportunity. I had a first-hand experience to see that it's not just us. At the Leadership Summit of the U.S.-India Strategic Partnership Forum, I'm on the board there. I'm also on the board of the U.S.-India CEO Forum. So a lot of perspective.
So you've got a ringside view on what CEOs are saying.
A lot of perspective of what others are thinking. And when it comes to the startup community, India has a super strong startup ecosystem. It really fueled that. Fintech in particular is strong. So at the Leadership Summit, we had a few unicorns on stage, and they were talking about their growth story from a government support perspective, from a regulatory perspective, from a funding perspective. So here's a government that really is able to mobilize funding. So from that perspective, that's an important sector for us to engage in. What do? We are a fintech, a very large one, but we are a fintech. And we're engaging with other fintechs, helping them with our payment solutions. So giving you an example, take the world of credit-based solutions. So in India, there's a tremendous opportunity to further democratize the access to credit. There's a lot of businesses that innovate around that. In the end, money has to flow. Payment solutions are needed for that. Data is needed for that to assess credit and make that easier for banks. So we provide those solutions. There's a whole opportunity in the world of commercial payments. There's a lot of fintechs that focus on helping businesses digitize their processes, enable reconciliation of data, engage their customers in a better way. Those are all solutions that we provide for years on consumer engagement, on customer engagement, on data management, and all of this, everyone in this sector needs one thing. In an ever more digitizing world where the digital economy becomes like the economy, cybersecurity rises to the top.
Well, and you can catch the entire conversation with the global CEO of MasterCard tonight at 7:30 p.m. only on CNBC TV 18.
Welcome back to Chartbusters. Well, a few stocks on the radar, some of them reacting quite sharply to the kind of earnings that they've delivered. First on our list is KEI Industries. The stock, after seeing a margin miss, has seen accelerated sell-off today, down over 8% in the session. The second stock on the radar that's seeing some follow-up buying is actually HDFC AMC. A good set of numbers from that particular company. The stock higher by almost 5%. HDFC AMC is the one that we're talking about. And after HDFC AMC, there appears to be a rub-off effect, a positive rub-off effect on other AMC companies. For instance, if you look at the intraday chart of Aditya Birla Sun Life AMC, ABSA, that particular stock, it's up almost 9% in the session today. So a significant up move and a valuation catch-up is what you could attribute to this particular run-up that you're seeing as far as Aditya Birla AMC is concerned. But with that, it's a wrap on this edition of Chartbusters. Stay tuned. Trading Hour comes up next.